All right, Dave Knight here at Knight Capital Management. Thanks for watching. Thanks for being here. We're going to go over the details of the month of October here. We're going to look at our TCB product, taking care of business in crude oil. I know you got a lot of Forex people out there and want to trade the currency pairs. But in the commodities market, and believe it or not, crude oil can be traded, and it also can be traded profitably as well. And I'm a futures trader. I mean, if you look at all kinds of stuff out there, you can see all the Forex stuff that's on the market. I mean, just tons and tons and tons. This is actually a market that can be traded almost 24 hours around the clock, just like all the other ones out there, and it's quite profitable to do so. In this trading strategy, we're going to look at, we're going to take a look at our trading log. We're going to look at our long-term plan on this trading strategy, and we're also going to, well, this is the optimum side that we're looking at. We're going to actually look at a trading day as well. And I'll try to do this within 15 minutes. So I got 14 minutes. Let's get started. All right, so we're looking at the crude oil inventories report right here. And we're actually looking at Forex Factory, by the way, Forex Factory, and we're looking at October 20th. So we're looking at the day, and obviously we know the data right now because the day has already happened, right? But at this time when we're coming in at 7:30, in fact, when we open up the room around 8:30, 9 o'clock-ish, when I'm getting started and whatnot, I'm looking and see what's happening in the market prior to us and whatnot, and then what's going on in the overall market that's, looking at it as well. So the crude oil inventories on this day comes in at 0.7, and in fact, my recommendation on this crude oil strategy and this is kind of bonus for you guys out there, kind of a free bonus if you never traded crude oil. You don't want to really trade crude oil, especially on a small account, in front of the crude oil inventories report. And we'll show you our one trade that we took for this day and the money that was made on this particular trading strategy. So it's kind of cool. So anyway, so we're looking at our particular time period. Now the open outcry of crude oil starts at 9 o'clock a.m. and it goes to 2:30 p.m. Eastern time. So 9 o'clock a.m. Eastern to 2:30, and this sucker trades around the clock. But I like to look at a 90-minute time frame. And in this case, what I want to look at, our 90-minute time frame that we try to trade in our room is normally 9 to 10:30. But with the 10:30 crude oil inventory report, we usually look at this from 10:30 to 11:30. So we have an hour worth of and it can be really a killer product and a killer strategy just for just grab one trade, take it to its maximum profit, and let it run. So we're going to look at the rabbit side of the trade as well today. So we're going to look at things that make sense to me. Maybe they'll make sense to you as well. So without talking further, let's look at 10:30 a.m. So we know we can't trade till 10:30. So what we want to do is look at each. We got our little instant replay up here. You've seen me use this before. So let's look at, let me make sure we're on here. We're going to look at each 5 minute at a time. So look, we're inside our dead zone here. Now we would define our dead zone, the 200 bar with the 50 bar here. So inside the dead zone, we don't really want to trade, and we're pretty much not trading until we get to the 10 o'clock area. And all this area through here is no good, no good. But we're pretty much waiting on the 10:30, the crude oil inventories to come out. So let's get to the time period that I'm looking for. Now here we are in front of the 10:30 area. Now if we go back and look at this particular trading strategy, you see that we saw a little room here at 9:05 mark, right as the market opens up, that you had perhaps a little short opportunity. You can find this happening on the crude oil inventory day. Occasionally you can see a nice little trade that you can maybe take inside what happens to be a trading range. For the most part though, we're just going to sit back and wait for the inventory report to come out. And the inventory report, like we said on Forex Factory, comes out at 10:30 a.m. So the next 5 minutes we're going to look and see exactly, we can see our entry point over here at 80.86. This is pretty much where I'm looking to get in, and you notice that the market's going to move up, and we'll talk about that in a little bit. So let's look at the particular trading strategy. Now here is a nice little move here. Notice that's the stop loss here. So you're looking at this particular bar here. It's moved up, it's moved over. Look at the power of this particular trade itself. I mean, it's closed above It's prior day. I mean, not prior. It's successful resistance here, and these little blue bars here are blue triangles are actually spike reversal bars here and here. So I know I'm going fast, but we got to do it quickly for YouTube here. So here is our entry point, and actually we're looking at an entry point a couple ticks higher than the high of this bar. So notice over here that our entry point was 81.11. Let me get rid of the pointer here. And you could have looked at it here or above this mark here. You can look through here. We decided to come in at 81.11, which was I believe was a little bit above this mark right through here, and we decided to come in right around this area. You could have come in at off of this bar right here would have been, and I think we actually got one. I can't remember how it worked out, but 81.12, 81.11, both these marks would have been good to come in right here. Notice that the bar is finishing up. We close, we open up here at 81.04. And the market quickly moves up here. I believe that we had a little bit of slippage in the. By the time I figured out where to entry point and then put it in, it was 81.11. Now this is not this automated type of thing. This is you as a discretionary trader putting a trade in and pushing your buttons to get it to work right. You have a multiple bracket that you can use, which is pretty cool on the infinity side, and I have a video at the round table showing that. But the 81.11 is our entry point, and we want to see exactly what we can get out of it. Now, on this particular trading day, our ADR is 2.34, translates out to 23. So for our first R, as Van Tharp talks about, we're looking for one R is 23. The second one, 23 plus 23 is 46, right? So we're looking for 23 and another 23 above that, 46. Let's go ahead and move 5 minutes forward. Now within 5 minutes, if we take 81.34 and 81.11, that's 23, and we're out on 1R. We're looking at to see if we're going to come out on this particular. Let's go ahead and look 5 more minutes. Let's stop here. 81.57. Now notice this market is just moving straight up. Very strong, close above, big green bar here, big powerful bar, and lots of powerful bars here. This is just a beautiful setup, a beautiful trade. And you had an opportunity to look at the top of this. Now this yellow line right here is what we call our upper average daily range. So we're not expecting the market to go much further than that on a burst or a thrust movement in our particular trade. So we're pretty much looking at this market to go a certain distance. And a little trick of the trade for you, since you're watching this video, is to measure this 82.24 and take 30 ticks away from it. So you're looking around 81.94-ish to come out of this trade. Notice that we came up to 81.90. So that would be your top target. And this, in fact, becomes our rabbit on this particular trading strategy that we're looking at. We're looking at maybe perhaps an exit in our rabbit. So we have an 81, I think it was 81.11 that we came in on to start with originally. Yeah. 81.34 was our 1R target. 81.57 is our 2R target, so 23 ticks and 23 more is 46. So in money terms, this is $230 a contract, and if you got 46 ticks out of the contract, this is 460. So just trading two trades here, if you were trading two on this day, it would have been 230 plus 460, or $690 on one trade. Take away $6 commission cost here, so 12 bucks, and you're netting $678 on trading two. Let's go ahead and look at our exit point quickly, and let's move to look at our log quickly to see how we've done the last 3 months. Notice that our rabbit, or part of this trade, gets hit right here at 81.94 at roughly 10.51. So we look back at this particular strategy, notice that it comes down through here, does not show an exit for us, goes back up here, and then runs our rabbit. So we hit the 30. Remember that upper average daily range was sitting at around what, 82.24, and we come down 30 ticks off of that, and we're able to run our rabbit. Now it does go on. This would have pulled you out of the trade here if you wouldn't have taken the rabbit off. And then notice that, and to make a long story short, nowhere in this trade does it ever get close to running us out of the trade. It's a beautiful setup. This particular trading strategy on this day, we'll look at our trading log quickly if I pull that up. Now, on this particular day, on October 20th, we were trading with 8 contracts. And this particular, just so you know, this particular trading strategy started with 5 on August 3rd, and now just 3 months later, you're trading 8 contracts here. This is a powerful, very powerful trading strategy that we've developed here at Knight Capital Management. October 20th, trading 8 contracts, and look at the net here. This is net. This is after commission cost. 3,082. Now look, you're going to have to be able to withstand a 1488, 1808, and in fact, you're going to have to withstand this 3 here to be able to, and withstanding a 4,624 drawdown. But you also have, think about how much money you have in here. You got 50,000 plus another 20,000 that you started with. So this is in fact $70,000. Now you can actually lower your delta, which I'm going to show that. And this is our long-term plan that I've went with, that we decided how we're going to get to $1 million. So basically looking at around October 2013, we'll be sitting at around, well, around somewhere between July 2013 to October 2013, we'll be at around $1 million in our trading account, not taking any money away. Notice that our delta is 1,500, but you can change, this is kind of the spreadsheet here. This is you can change your delta here, and make this, you know, for instance, a 1 delta, 1.5 delta. A 2 delta means that we had normally looking at 1,500. A 2 delta mean you're looking at 3,000 per contract. I'm kind of running short on time, trying to get this in for the YouTube time frame. 15 minutes kind of sucks sometimes, but you can see that we do have a plan, and our next target, now I put it on my trading log. Let me get it up here again for you. That when we go, you know, when we go into 9 contracts, when our particular trading strategy gets to 60,750 here in profit, then you know you're going to go to 9, and that's basically looking at your long-term plan modified in this case. 80,750 right here. See the 80,750, and you're trading 9 contracts. So it's your 20,000 initial plus the 60,750. So basically you'd be sitting at 80,750, and you're trading in 9 contracts. You can see that around 114,500, you're trading 10 contracts and so forth. Now you can modify this down. You can take the contracts down and start with 2, 1, whatnot. It doesn't matter. You can always work your way up to trading $1 million. This is a beautiful part of this trading strategy. It's $1 million trading strategy, and you can do it. I believe it with all my heart. This can be done. All right. So, well, we want to look at the statistics quickly with the last of the time that I have left. 108 trades here, by the way. We'll look at our statistics on the particular trading strategy here. After 3 months of performance here, we've had a starting capital here of 20,000. Once again, you start with 5 or 10,000 and work your way up to $20,000. I mean, there's a plan. You know, now we started this particular performance with 5 contracts. You could start with 1 or 2 or 3 and work your way all the way up. This is a very, very powerful trading strategy. When you have more money in your account, you know, obviously that drawdown is going to be that's obviously a component you got to be careful with. If you are feeling that if I lost $4,600 on 3 trades, then you obviously need to up your delta and lower your contract size. That's how you defeat that particular problem. You know, when you got more money in there, you're actually going for more. You're being aggressive, trying to make more money. At some point, and if you look at the long-term trading plan here, I've got 10 seconds. All right, you know, we've run out of time. 15 minutes went quick here. contact me here, support@knightcapitalmanagement.com. I look forward to talking to you a little bit later about this trading strategy. Give me a call, send me an email. It's Dave Knight here at Knight Capital Management. Thanks for watching. Thanks for being here. We'll talk to you later. 15 minutes goes fast.